Yo, what up, what up? What up? My name stay, what stay? What everybody stay, what's good? Let me know if y'all can hear me. Tap in who is here. Let me know if y'all can hear me right now. So I can know who is here. Shout out who is here, where you from, who's watching, who they are active. Who is in the building? Can y'all hear me? Can everybody hear me? All right. All right, Shavana in the building. Shavana from Jamaica. All right, big up yourself, Shavana. I want to join your daily signals group, but blew my VIX account and used my last money to join Traders Fund. I guess that is Pro Traders Fund to get funded. What if you genuinely don't have the money at the moment, but would love to be a part of it? All right, so I'm going to give this advice to everybody. Like, Shakur from Russia. Nah, I got something else to know. Shavana, my advice is to focus less on trying to trade to make money and focus on accumulating some money to invest in your trading journey. Right? I don't want anybody to have the misconception that you can actually just become rich overnight trading, or trading is something you can actually start with $0. You can't. You know what I mean? So as much as I'd love to say, hey, come into my signals group for free, it's unfair because you have persons who pay to actually be a part of the group. You know what I mean? So I would say just take advantage of the free content like this, like the daily free content, the daily tradings, the daily live trading that I would do sometimes, or even the Sunday chart breakdown. See what you can catch from it and just try on your journey. You get me? Otherwise, from that, try and accumulate some funds, save a little here and there until you have enough funds to actually invest. Because the greatest thing about growing and making money, you have to have capital to invest in yourself. You get me? So I don't want to give anybody any highfalutin ideas or any misconception. Like, with every business, you have to have money to start. You understand what I'm saying? You have to be willing to lose some money in the upfront process. But no, just continue to be consistent, and over time, you make back all of that money there. So I would suggest that you try accumulate some funds first. You know what I mean? Even before you even purchase the funded account, I would advise that you spend most of your money trying to learn the skill first. And then after you've learned the skill, then you can get your funded accounts and all these things. I always tell all my students that give yourself between 6 to 12 months. You know what I mean? A lot of us, we expect that we're going to learn to trade in 1 week and we're going to be profitable. Or we're going to learn to trade in 1 month and we're going to be profitable. It's a process, So you have to be willing to be a part of that process. Every single day for the next 6 months to 12 months, you just go at it. You win, you lose, you learn, you win, you lose, you learn, until you find a little edge where you're comfortable with, and you find your edge, you find your routine, and then that is when things start to change, completely change for you. You know what I mean? So don't rush the process. You know what I mean? If you don't have the money, just take advantage of these free opportunities until you get the money where you can actually invest and get more in-depth mentorship from somebody like myself or anybody else in the space that you believe is a good trader. but I wouldn't advise for you to have this level of desperation, like, oh, I don't have any money, but I want this and I want, you understand? I'd prefer if you just focus on getting the free knowledge as much as you can. And when you save up enough money, invest in yourself. Invest in a course, invest in a mentorship, invest in a group. You know what I mean? Because even where my signals group is concerned, I don't even have a signals group. It's not really a signals group. It's like a learn and earn, right? So I'm still teaching my students how to trade. That's the number one caveat of it, is they're learning how to become better traders. But at the same time, if I see trades and I see trading opportunities, I share those trading opportunities in the group. So it is not really to say I'm doing it as a signals group where it's like the focus is the signals, the focus is the learning. You know what I mean? The signals is just the icing on the cake. So if I see an opportunity, I say, hey guys, I see this opportunity, jump in now. So focus less on trying to get signals and focus more on trying to understand trading, understand the skill set. That will work out for you a little better in the long term than in the short term. It's just like people using bots. I don't have a problem with you using bots, right? But the thing about bots is it's unpredictable, right? And you can lose a lot of money doing bots. You can also make a lot of money doing bots, right? So you still need to have that base knowledge. You still need to have that base knowledge. Suppose one day all the brokers or all these people start to ban the bots. What are you going to do? Are you going to stop making money? You know what I mean? So it is important, guys, that you learn to trade. That's why I created this thing and I call it Learn to Trade. I want you guys to actually focus on learning this skill. Don't focus on the money. The money will come, I guarantee it. But just focus on the skill set. That's the most important part, all right? Ranzo in the building, big up yourself, my bro. Always live and direct. Big up yourself, Ranzo. Real talk, closed mouths don't get fed. I have to ask because what I'm saying is real talk, though it's a journey. Yeah, man, bro. Bro or mom, or I don't know if you're a girl or a guy. But yeah, just trust the process, man. Just trust the process. I guarantee you, just take your time. There's no rush. Just trust me when I tell you there's no rush. You know what I mean? If you're doing a 9 to 5, whatever you're doing, keep doing that and make your money and accumulate some capital and say, okay, this is the amount I'm going to use for my trading. Right? So whether it be 10%, 20% of whatever you earn, you put aside some money and say, this is what I'm going to invest in my trading. Investing meaning I'm going to get a mentor, I'm going to buy a course, I'm going to fund an account, whatever it is. But you have to have money set aside for this. It's a very expensive career, but it's a very lucrative career as well. So you will actually earn far more money than you've lost, than you would ever lose. I guarantee it. You're going to earn far more money than you ever lost doing this. But you have to first break down the psychology of, oh, I need to make money. No. Trust the process. Learn as much as you can. Every time that I have a live, every time that I have something like this, make sure you're on it. Make sure you're asking questions. Make sure you're active. And that is what will help you, to get there. So, and that's what I do. Any community that I'm in, I'm the most active person. I'm the one asking all the questions. I don't care who feel a way about me asking questions. I'm going to ask a million questions. You know what I mean? Because I want to learn. I want to be successful at it. You know what I mean? I have a group that, is a free group and barely anybody talking, barely anybody asking questions. You can't be successful if you're not active. You know what I mean? As I said, closed mouths don't get fed. You have to be asking questions. You have to be learning as much as you can. So it's a process and you'll get there. I'm 19 in college, so yeah, I'm 19 in college, so yeah, that's really why sometimes I can be talking about the money to deal with certain things, but you have to focus on the knowledge for real. Yeah, I understand. I've been there, If you're 19 in college, trading is not the way that you want to make money. Right? I'm going to be completely honest. Not saying you can't make money from trading, but it shouldn't be your main focus. So you need to find something else that will bring in easy and quicker money for you. And then you invest in your trading career. You don't want to use your money as a college student to be investing in a trading career. It's going to become frustrating. You know what I mean? And you're not going to be focused on really learning the skill set. You're going to be more focused on the money because you have your bills and you have these things to pay. So find something else in the meantime that will bring in income to you. Whether it be like you buy and sell, you can start a online store. You can do like you're in college, so you can, if you're good at a subject, you can probably do like a tutoring thing, or you can do like a business where you help people with different things that are going to the same. Just think creatively how you can actually make money to invest in your trading career. You know what I mean? Because the money that you're earning will be able to offset some of your expenses and help you to build your capital for your trading. And in the trading now, after you've learned your skill set, is what will transcend you into making a lot of money. And the thing about trading, to guys, don't think that when you make a trading profits, that's it. Don't think that the trading profit is what is going to sustain you. You have to take the money that you make from trading and invest it in other things that will generate income. So don't just rely only on trading. You know what I mean? Take your money and invest it in other things that will generate money for you. Trading is a tool. Money is a tool. It's not the end all, be all. That's not it. You use it to make a lot of money, and you use that money to invest in things that will generate more money. You understand? So don't think that a lot of times when you see these guys who are driving Lamborghinis and all these things, trading got them to there, but it's not the actual trading cash that they use to get there. They get the trading cash, they invest it in real estate, in other businesses, they're invested in other things, and in the money that they earn from that, that is what they use to buy their luxury items. You know what I mean? So don't think that when you see people in luxury items, it's just them just cash out them trading profits and just go buy a Lamborghini. You know what I mean? They invest first, and then the money that they make from the investment, then they use that and buy those luxury items. So focus first on getting the money from other means, buy and sell, whatever it is. And then that money now you invest in yourself, in your skill set, in learning how to trade. And then you make the money from trading. And then the money that you make from trading, you invest in other things. And then after you invest in other things, you use the profits from those things that you invest in to buy your brand new vehicle, or to invest in your house, or whatever you want. All right. So that's my advice on getting there. Cool. Who else in the building? Anybody else have any questions? Before we jump in the charts. Anybody else have any question before we jump in the charts? Or we can jump in the charts. Let me know, guys. Let me know. Come on, guys. Talk to me. We're good to go? Okay. All right, Martin. How do I get rich like you? Learn to trade. Learn to trade and you can get rich like me. Ah, boy. Track code easy, you know what? All right, my team. Let's see what's happening on the charts here. Of course, guys, today is not a trading day because it's a public holiday in the US, which means that it's a bank holiday in the US. So the markets should not be moving with any volume today. So I would say today, stay out of the markets. So I'm just going to do like a quick overview of, where we can expect some stuff to happen. And then we take it from there to see what's what. All right. So where are we now? We're on the 25th of May. We're almost at the end of the month, right? So Let's look at the monthly chart to see what the month on. So we're starting with GA. Got a nice little trade from GA. So, you know, expecting a little bit more. So yeah, on the monthly candle for GA, we can see where price is in an uptrend. And can anybody tell me, based on price being an uptrend, what are we looking to do? Buy or sell? Anybody from the chat? What are we looking to do? Buy or sell? Yes, thank you. Thank you, Miss Plummer. Please to smash the like button, guys. If you're here for the first time, please to hit the subscribe and tap the notification bell so that you know when we go live. So if you're here, everybody who's on the live right now, please to just tap the like button, the thumbs up button, and subscribe if you have not yet. All right. So yes, Shakur, you are correct. All right, Tyonia. Pick up yourself, buy, right. Okay. Yeah, so based on the fact that we're looking at an uptrend overall right now, we are looking to buy, right? So overall, we're looking to buy. Now, let us look at areas where price could be attempting to go. So you have this high right here that price created, right? And you also have this high right here that price has created. Now, what we notice about this high is that price is actually at this high. Price broke above the previous month, then it came back and broke below, and now it's maintaining this high. Now we can mark up the body closer to the body of this candle to see the range that it's in. So the real range that this price is in right now is in this range from here to here, to about right here. Right, so price has broken above here, closed above here. So the next point it could be attacking is right here. But it's at this point now, that is why you have this hold up right here at the moment. But I'm anticipating that it's going to break above there. So overall, we're still looking for buys. Now let's look on the weekly to see what the weekly is telling us. So on the weekly, we see where price pushed up here, created this pullback, and now starting to push up. So we can definitely anticipate again that price is heading to the upside. Price created a support level right here. Right, so we have a support level right here that price has created. So the price broke above here, created this support level right here. Then it pushed up, creating another support level, and now it's pushing up again. So in that support level, you have this resistance level that is right here, which, as you can see, the weekly candle actually broke above this resistance level, which means that this next weekly candle is probably coming down for a week to actually go back up into this area. So again, that adds to our confirmation that we're looking for buys, right? Now let's go to the daily. On the daily, we can see where price came up to here, and then it dropped down again, creating this support level, and now it's pushing back up, right? So on the daily, we're seeing where price is heading towards this previous daily high to see if we can break above it to continue up. So this is the kind of movement that we're looking at. We're looking at price to come up here, and then we're looking at price to tap here, and then continues move up. So that is how we're expecting price to go. Right off the bat, we can see that there's already a change of character inside here. All right, so price pushed up, was coming back down, break here. Instead of breaking and creating a lower low, it created a higher high, and then created a higher low. And now it created a higher high again. So now we're expecting it to pull down and create a higher low to create another higher high. So even though we are definitely looking for buys, we now have to look on the lower time frame to see where our buys are coming from, right? So let's go now to the 4-hour time frame. And on the 4-hour time frame, we can now say, all right, what are the areas now that we're looking at for price to actually head back to before making a move? All right, so we see right here where this is the high that created this low. Right, so this is the high that created this low, which means that right here would have been our break of structure. And then this now would be our high. So price came down, created this high, then created this low. And then after it created this low, it started to push up. Another equal low, start to push up. Another equal low, start to push up. Another equal low, and then break here. So now this now becomes our internal break of structure. So this is our internal break of structure. Right? And then now, as it approaches this high, came here again, it break another structure right here, another internal break of structure, came here again, and then it breaks here, which now creates this as our change of character. Because this was the last high that created this low. And now that price has broken this last high that created the low, it has now signaled to us that definitely we're heading to the upside, because the trend has now changed from a downtrend to now an uptrend, right? So now we look at areas where price can actually react from. So the first area that we want to look at where price can react from on the 4-hour is this area right here that is reacting from now. So this area right here is a good reaction point, because this reaction point could be an order block that pushes price up above this high, which would have been the most recent high that was created. So price could actually move from right here where it's at now and then push up and then continue its move to the upside. So that's one. The second place that we can look for price to come back to is actually down here, which is this order block, another order block. This order block right here caused the break of structure right here. So because this order block caused this impulsive move to break structure, this is now an important level for us to look at. So now we have here that price can move from, and we also have price possibly coming down here and then moving from here, right? So those are the two areas we're looking for price to move. Now, what could happen though is that if we see something like this where price comes all the way down here and then start to retest, then we can look for sales going down. But for now, based on how the structure looks, we can only anticipate buys. So we can look for buys somewhere in this area right here, or we can wait for buys to come further down. Now, I am more anticipating, or I'd prefer if price came further down here, because, and the reason why I prefer price to come further down here is because right here, we have some liquidity sitting on right here. Now, this liquidity area signaled to me that there are people who took their trades, their entries, somewhere along here. And their stop loss is below here. And they're anticipating price to move up. Now, what the market tends to do sometimes is the market tend to come and stop out all of these people, right? And then push up. So this is the area I'm more interested in. And as you can see also, price actually left what we call a fair value gap between here. Now, because this fair value gap is right there, that is even more confluence to me that I'm more willing to wait for price to come down here, because this fair value gap signals that there was this big push to the upside and there was nothing left in the market. So there was an imbalance left in the market. So there was an imbalance left in the market, and because the imbalance is left in the market, this is a signal for price to actually come back into the imbalance, right? And then possibly tap the order block and then push up. So I'm anticipating that price might be coming somewhere down here before pushing up. Now, as we kind of refine these areas, we can see where we can make this even much cleaner. So we can look at here on the 1 hour as our order block. And right here, between here as our fair value gap. And again, this area right here is our liquidity area. And then we'll move down to the 30 minutes and we'll see if we can refine it even better. Again, this area right here is our order block. And then we can fix our fair value gap a little bit more down to here, just to get a nicer entry. And as we go to our 50-minute, which is our entry timeline, we can refine it even further. So as you can see on our entry timeline, our fair value gap will be here and our order block would be right here on this 50-minute doji candle. So now what we want to see is we want to see price break down here, tap into here and then push up, right? But I think we can definitely look for price to even tap right here before pushing up. So if we were to take the trade back to the upside, I would possibly look at, depending on how price reacts, I'll probably look at my entry being here, my stop loss being below here, and my take profit being all the way up here to the high, which will give you like a 1 to 8 risk to reward. Right? So this is where I'm more interested to seeing price come to. So that is why I would say that area right there will be my point of interest, which is the 2.07400 area. All right, so that is where I'm anticipating that would be the best place for me to take a trade. So I'd want to see price come down here, tap into here, and then push up. No, the other alternative is that if this doesn't play out, we'd want to see price push above here, then leave another fair value gap somewhere along here, and another order block somewhere along here, and then we'll wait for price to come back down to tap into this area to continue its push up. So we either wait for price to come down here and tap into this area, or we wait for price to break above and then come back and tap in and then push up. All right. So the thing is that, guys, at the end of the day, the market will move like this. And a lot of people try to buy in this area and this area. This is where people try to buy. That's one of the biggest mistakes that traders make. You try to buy at the highs when price is in an uptrend. You don't try to do that. When it comes down to price being in an uptrend, you're looking for buys, you're buying at the lows. This is the area. So when price push up, it comes into the fair value gap or the order block right here and then pushes up. Same thing right here. Comes into the fair value gap or order block and then push up. That's why we're waiting on the pullback to get price here so that we can push up, because the most that we can, the least that we should be able to get is at least price tapping this high. So let me show you something. If price was going up in an uptrend, right? And we were supposed to get in here. This is the high now. This is the high right here, right? And we're looking for price to come down into this area for us to take a trade. Now, if we take the trade in this area, price could come up, tap into here, and then come down. And this is a formation that most of us refer to as well. What will be this formation at the top right here? Anybody can answer this formation at the top right here? What would this formation be? There you go. All right, so Ricardo Gooden says a double top, Tionia say double top. You're right. You're exactly right. So, but the thing about it, guys, what do you realize? If we had entered here, right, this would mean that by the time price gets to here, we would have already made our profits before price start to reverse down. You get me? So we'd have already been out of the trade. We'd already taken profits before price start to go down. Now, suppose there was a level higher up that we wanted to target. At least when we know that price reach here, we'd have at least gotten a 1 to 3 for price to retest and then continue up. But the idea of entering before on the pullback is that when you get the pullback, you get more leverage for price to move up. Now, what if, guys? Now, what if instead of entering on the pullback, we try to enter here for a buy? What will happen is that price will do something like this. Boom, and stop us out. We're entering right here because we see a little movement up in this area. We could always see price will start to come down right here, take us out the trade, and then price start to move. And then a lot of us say, oh my God, the market hates me. Oh my God, this and that. No, it's because you're entering at the wrong place. You're entering too high up here or even up here. You want to wait until the market does a decent pullback into an area, an order block or a fair value gap, where you have more space, more room for price to come back. So even if price wants to return back down and start to break structure for sales, you'd have already gotten your profits from here. And if price wants to continue up, then so be it. We're getting more profits. We're getting more movements to the upside, right? So that's more money for us to the upside if price does that. But at minimum, when you enter in an area at the pullback, at the low, you have a whole heap more space to make money. Everybody understand why we're entering at the low, why we're entering at these levels instead of at the high? Everybody understand that, right? Is that clear? All right, let me know if you want me to go over it again, if you're not clear. Is that clear, everybody? All right, drop a 7 if everything is clear. If you're clear, drop a 7 in the chat. All right, good to go. Ricardo, yeah man, respect. Ricardo said clear. All right, cool. So yes, that is why, guys, I'm waiting for price to pull back. I'm waiting on the pullback. I'm not excited to enter. A lot of people will see this now and say, oh, I need to enter, and they're rushing and get entries and then price just pull back. This is too close to the high. I want price to come as far away from the high as possible, show me signs of rejection, and then move from here and go to the upside. Now, imagine now, if I got my trade from here, my stop loss below here, this would be a 1 to 6, a nice 1 to 6. Now, if I enter from here, my stop loss would have to be below here. And by the time I reach the top right here, the high point where price could reverse from, this is only a 1 to 1.42. Now, this is why I keep telling you guys that you have to look for opportunities that will give you a minimum of 1 to 3 risk to reward. You don't want to be trading no 1 to 1s or no 1 to 2. That's not going to make you profitable. You're profitable when you get the maximum risk to reward, right? So 1 to 1, if you had $1,000 and it's 1 to 1.42, if it did play out, you would actually make $1,420 if your risk was $1,000, right? But if you lost, you'd have lost $1,000 on this trade. Now, you're going to have to look at yourself and say to yourself, is $420 worth losing $1,000? Am I willing to lose $1,000 just for $420? Or if you're entering here, your stop loss a little bit low here, and you're aiming for the same high up here, that would give you a 1 to 8.69, which means that if you actually risk $1,000, you'd make $8,690 by risking $1,000. This is A, and this is B. Now, guys, I want a vote. Which one sounds more logical to you? Risking $1,000 to make $420, or risking $1,000 to make $8,690? A or B? Type it in the chat. Which one do you think makes more sense to you? Which one do you think makes more sense to you? A or B? Risking $1,000 to make $420, or risking $1,000 to make $8,690? Which one you say? Let me know. I'm looking at the votes and I'm waiting for the votes, and I'm going to move on till I say the votes. All right? Taiwonia said B. All right. Shavana said B. All right. Ricardo said B. Yeah, guys, come on. It's logical. All right? It's logical. It is logical. Like, so I'm going to ask the same question now, right? If you had an opportunity to go for $8,690 by risking $1,000, imagine, you're risking $1,000 to make $8,690. Would you be okay with losing that $1,000? If you know, say, there's a 50-50 chance of you actually making $8,690, would you be okay with that? Yes or no? Answer in the chat. Yes or no? Would you be okay with risking, would you be okay and say, yo, Jano, that $1,000 didn't worth it. I'm not going to stress over it, because guess what? If that $1,000, if that trader did play out, I make $8,690. Would you be okay with risking $1,000 for $8,690? Yes or no? Very much okay, all right? See there? Very much okay. Now, Taiwonia, would you be okay with losing $1,000 just to make $420? Just to make $420, your risk. Are you okay losing $1,000? Which one do you think would give you more of FOMO or more anxiety? Which state of mind you believe will give you more anxiety? The one for risking $420, or the one that is risking, or the one that is making $420, or the one that's making $8,690? Like, for me, I would be calm and cool and collected knowing that I'm going for $8,690. Right? I'm cool and collected knowing that I'm going for $8,690. So if it don't play out, damn, man, it's cool. I'll try again and try to see if I can go for a next $8,690. But I start fretting Ross when I see that trade trying to go draw down when I'm only trying to get $420 and I'm risking $1,000. That is when your psychology start mess with you, because you are thinking to yourself, imagine me I risk $1,000 to make $420. That's when you start to do foolishness in trading. So even just the trading habits and what you're going for actually plays on your psychology. So that's why it's important to ensure that whenever you're waiting for the best opportunity to trade, you're not just jumping in a trade because you see a setup. It has to be the right trade at the right time and all the confluences line up for you. You don't want to rush in, because guess what? At this level, that price is at now. You see an engulfing candle, you say bombard, see an engulfing candle there, an engulfing candle form, you want to enter the trade right or so. And then the trade go up and you make, so say you do make up $420. For the whole time you fret, because you don't have price, I got even drive probably full pull back and take away $1,000. And then you go vex, you can say, imagine my risk $1,000 for make $420. That doesn't make sense. It just makes more sense for it to come to a level where you have an opportunity But if this trade plays out in your favor, you're going to make $8,690. That is why patience is key when it comes on to trading. Patience is key when it comes on to trading, right? Wait for your setup and execute when your setup presents itself. So for me, I am waiting for price to come down here, because if price comes down here and start to reject from this point, I know that it's now going to go up and I'm going to maximize on my profits and I'm going to make $8,000. I'm more excited about that opportunity than trying to enter here and then price push down, either knock me out for $1,000 or push up and only give me $420. That don't make no sense. All right, so we're waiting on price to come down to this area right here. This is the area right here that we're waiting on price to come down to. All right, everybody clear with that? We can move on. Drop a thumbs up in the chat if we can move on. Let's go. I'm not seeing the thumbs up, guys. I'm not seeing the thumbs up in the chat. Come on, man. Let's keep the thing active. I have one thumbs up. Everybody else, what's up with everybody else? Come on, guys. Let's go. Let me know if you guys want to see me go through an example. As a matter of fact, let's go through an example. Say, for instance, let's do some back testing, guys. Since we're not trading tomorrow, let's do some back testing, right? Now, this is similar to the scenario that we just expressed a while ago. Zin. So, what do we see happening here at this point? We see a breaker structure right here, right? And then we see price coming down. Now, what we're looking at now, guys, is we're looking for the areas that price can react to. So we have this area right here. That's an area where we're expecting price to come back to. Now, this is the same scenario that we're anticipating for the move to come this week, right? Now, watch me. So we know, see that price is pushing up, price break structure. So we're anticipating that price is going to come down here, and when it comes down here, it's going to start to push up and then break this high, because now this is the new high, right? So we start to refine the area where we want price to come back to. So we look at the 1 hour, and now this becomes the area of interest. This is the candle before the move happened. So now we're looking at this area as a potential area for price to push from. So we're looking at price as this to push up, but we know that price is supposed to push up, right? Then we'll go to the 30 minutes to try and refine even more, right? So we see here, this area right here, that could be the area that price push up from. And now we'll go to the 15 minutes to see if there are any other opportunities. So now, right here, we have a breaker structure on the 15 minutes. Right? And we had a breaker structure here. And we had a breaker structure here. Now, imagine now if we saw this resistance, because they tell you now, what the gurus on Instagram and Facebook and YouTube tell you is, there's a resistance here. So you enter on the resistance. Let me show you something. This is why I'm going to show you. This is key, guy. I want you guys to pay attention to me. And now I want to ask the question. How much of you guys would have entered on this right here? So be honest. How much of you guys would have entered on this right here? So Just show your hands. Just show me your hands. How much of you guys would have entered on this particular trade right here? Be honest with yourself. Ricardo said no. Who else? Why would you not enter on this trade? Because the setup seems perfect. Price come down to a resistance level. Them call this, what them would have said, this is a roof turn floor, right? So the roof or the resistance was broken, now it's a floor. And now we're expecting price to push up because we see the engulfing candle. So now we're expecting that this is the move. Why wouldn't this be the move? Why wouldn't you enter on this move? This is perfect based off of how you're supposed to trade, isn't it? Isn't this perfect based off of how they tell you to trade? They have a resistance level right here, a support, a resistance level that turns into a support level. And then when it reaches the support level, it gives you an engulfing candle. You're telling me that you guys would not enter on this trade? Nobody would enter on this trade? Nobody at all would enter on this trade. Y'all lying, man. The old me would have entered on this trade. Because guess what? Even though, and I see Chakor, let me see what Chakor, so let's bring up Chakor's. So Chakor's comment is too strong, bearish, right? But the reality is, right, even though it was strong, bearish, you had a momentum shift because this candle, the second candle from here, is not that strong bearish. And then the candle after it is a bullish candle. So to me, this is a really good indicator that you should be buying. It's a really good indicator that you should be buying. Ricardo said, for me, that bearish candle broke too much off the roof. Need some retest. But bro, this is the retest though. This is the first retest, you know. And then this is the second retest. So why wouldn't this be an area for you to enter from? Come on, guys. It's only because you know say it's going to lose. That's why you now say that. It might be honest. This lines up with what everybody who teaches trading, or most people who teaches trading, say. Price break above, retest, it push up, come back and retest the same area, and then you get an engulfing candle. That is the playbook. That is the playbook. So I don't see why this would be a bad trade. Right? But let me tell you why I would say it's a bad trade. The reason why this is a bad trade for me, right, is because you still have liquidity right here. You have liquidity right here, and you have liquidity right here. So you still have a lot of liquidity hanging around here. So I'm expecting price to come, grab all of this liquidity before pushing up. Right? So now let's look at what's happening now. So this is an area. So for me, based on the fact that we have liquidity right here, and we have liquidity right here, I'm expecting that price would either tap into this order block or tap into this order block, right? So these are the two areas of interest for me. Now let's see what happens. Remember, now this is the high. And even if we entered, say for instance, we entered from here, I will put our stop loss below here. This would have only given us a 1 to 2.56. That's all we're getting from this. Now let's see what happens. What do you guys notice from what happened a while ago? Anybody? What do you guys notice from what happened a while ago? Let's remove this. Anybody? Answer anybody. What stands out to you about what happened a while ago? Come on, guys, talk to me. Nobody? Yo, I swear, you see that you, bro, you see you? You're gonna reach out for trading. Remember me tell you that, yeah? You're gonna reach out for trading. Believe me, I tell you. Believe me. Shakur says he respected the order block, then shot up to the high. That's exactly what happened on both levels. So the order block, he respected the order block, shoot up. It even came back again and shoot up. Right? And then went up to the high. Now, so for instance, this was your initial point of interest. And your stop loss was below here. This alone would have given you a 1 to 5. Are you seeing that, guys? Are you seeing that? This alone would have given you a 1 to 5. So you have the first area that we're looking at as the order block, it still respected it and gave us a 1 to 5. And then the second area that we're looking now as an order block, let's see what's going to happen. Do I need to say anything more, guys? Let me know. I don't need to say anything more. So if you were trading this, right, you'd have gotten a 1 to 5, and then you'd have gotten a 1 to, say for instance, your target up or so. I think that is where it goes, right? Yeah. So that I get a 1 to 5 and a 1 to 8. 5 and 8 are how much? 13? So you'd have basically made 13% on your money. 13% on your money. That is what you'd have made if you were in this trade. So if you were in this trade, you'd have made 13% on your money. Now, a question I get a lot of too is, how do you manage your trades, right? Now, I'm going to show you something, guys. Now, say for instance, we're in this trade right here. This is our first trade that we're in, right? So for instance, this will be a 1 to 6 actually. So for instance, this is our first trade, right? Remember, you know, we're looking at the highs. So I am managing this trade based off of price breaking highs, right? Because remember, in an uptrend, price is making higher highs, higher lows, higher highs, higher lows, higher highs. And along the way, it's breaking the previous high. So just remember this formation, right? So now I've entered the trade. Now for some people, as soon as them see price start move up, they're ready for close. So like enough people are gonna say, oh, I'm gonna push my stop to break even. No. You already entered the trade for it to either hit a stop loss or hit a take profit. I'm not saying that you shouldn't go for break even, but you have to know where and why you're going for break even. The price don't act, the price didn't move yet. There's no movement on the price yet. So how are you going to go for break even when price don't even start to create structure and break structure yet? So you have to wait, guys. Boom, price came up here, but it didn't break structure. It rejected from it. So I'm still holding the trade. Now watch this. In the process of price moving up, it broke internal structure right here, right? And therefore, it left this order block right here. So let's wait and see what happens. What do you realize about price when it tapped into here? It actually rejected from the order block. So you could have actually entered again at this point. So you could have gotten another entry at this point. And then what we realize is that the high is now broken. This high that was there now becomes a break of structure, because now it's officially been broken. And you get another entry right or so. Now let's wait and see. Price broke structure again, right here. Let's wait and see. And then we're out of the trade. TP hit. So price broke structure right here, left this order block for us to get in again. A lot of people would have been afraid to get in because them see the pullback. But guess what? There's an order block right here that we could have get in again. So instead of it being a 1 to 6, you get a 1 to 6 right here, and you get a 1 to 3 right there, which is a 1 to 10 in total. And then you're looking at structure being broken. So along the way, structure is being broken. Let's look again and see what happens. So wait for price to come back to our next area of interest. Price comes back, tags us in the trade. This is what we're waiting on price to come to. We're targeting up here again. So now we're in this trade. Now this becomes the high right here. We want to see price break. So we're not going break even, or we're not looking for any more positions until price breaks that high. So until we see that high broken, we're not doing anything. So now we see the high broken. It left a fair value gap right here. It left an order block right here. But price has already shot up, so there's not even an opportunity for us to take another entry because price don't shoot up already. Price don't shoot up already. Let me see if price don't give us another entry yet. Hold on. No. Right? Or you could have been trailing price all the way up to here. Could have been trading price all the way up to there. And this should have given us a 1 to 8. Aha, big up D. D in the building. What about mama? What is an order block and how do I find them? All right, cool. Honestly, I don't understand the term order block. Okay. Big up to the opinionated chick. Guys, please, if you're unknown, you're watching, go and follow the opinionated chick on social media, YouTube, Instagram. Cool content. All right, big up yourself, D. Aneta, what's up, Aneta? Big up yourself. I got it right this time, Aneta. I got it. Big up yourself, Aneta. Welcome. Right, so somebody asked now, what is an order block and how do we identify it? Right? So while I would implore you to probably go on YouTube and type in order block, I'm going to give you as much information as I can about order block. But when you're finished, guys, you can always go on YouTube and just type in order block, and then you'll be able to see what an order block is. But an order block in a trend, whether up or down, right, is an area where we can see price move from channel. That's uptrend, and that's downtrend, right? Now, the order block in an uptrend is the last candle with a red, green, blue, whatever. But the last candle that started an impulsive move to break a previous high. So the last candle to start an impulsive move to break a previous high, which now creates what we call a break of structure. So the last candle that starts an impulsive move that breaks a previous high. This candle is called our order block candle. When price pulls back, it creates this high. The candle that caused the impulsive move to break this high, this candle is called the order block. When price comes back down and does an impulsive move again, the last candle that created this impulsive move to the upside to break the previous high is what we call the order block. On the downside, it's the last candle to break the previous low to cause an impulsive move is what we call the order block. So we're expecting price to tap back into the order block to then create another impulsive move. The last candle inside the order block to break a structure, to break a previous low, we're expecting the candles to come back into this area, tap back into this area to cause another impulsive move to the downside. Is that clear? Is that clear for everybody? I'm going to show you the example, but is the concept of it clear for everybody? Drop a thumbs up if you understand the concept. Come on, guys. Come on, talk to me. All right. Who did ask a question? Ricardo, you did ask a question and how you take long for answer. You were the person that asked a question. Do you understand? Okay, good. All right. So again, sorry. The last candle to start an upward move is what we refer to, or the impulsive move to break structure. That's what we call the order block. Now, let me give you an example on the charts. Right? Let me give you an example on the charts. No. So we're on the charts, right? Let's go back to, let's go back a little bit. Stuff. Let's start from here. All right. Now, what do we have here, guys? What do we call this? So price was below here, and then it made this impulsive move. What did price just do? Anybody in the comments? Quickly, let's go. Let's be quick on it, guys. We have to be quick on it now, okay? So price was here and it broke above here. What happens in this area when price broke above? What do we call this? Okay, there you go, Ricardo. Break of structure. Well done, Anita. So this now is your break of structure, right? Now, what is the last candle that caused the break of structure? Can anybody see it? Is it A or is it B? Which one is it? Is it A or is it B? All right, Anita says B. Who else? Anita, make up your mind. It's A or B. Make up your mind. Come on, guys, talk to me. Is it A or is it B? Okay, so Anita says A. Okay, anybody else? Okay, Tyrone says A. Ricardo says A. Chakor says A. And you guys are all correct. You're not bright student. Clap on yourself. So as you can see, this candle right here, was the last candle to cause this breaker structure. The last candle that caused this breaker structure. Right? So once the breaker structure goes up, this now becomes our order block. And now we just wait on price to start to make some moves. Now what happens is price pushes up aggressively, right? Price pushes up aggressively and it leaves what we call what is this area called that price leaves? Anybody? This area right here, what is this area called? Well done, well done. Right. Yes. So yeah, just to be clear, so Ricardo asks the entire week, yes. So how we mark off the order block is the very top of the wick of the candle to the very bottom of the wick of the candle. So this entire area right here, this entire candle from wick to wick is our order block. And then on top of the order block, we're left with something that we call a fair value gap. So this gap right here signifies that there's imbalance in the market, right? So now we're waiting for price. So this is more confirmation that price might be coming down in this area. So this is our area that we want the price tap into because it left an order block plus it left a fair value gap. So this is where we want to enter from. So we wait for price to tap into here. So we set our trap here. The stop loss will be a little bit below the order block, and our take profit would be a high, a previous high, like probably this high right here. So we're targeting all the way up here, which is a 1 to 6. And then our first area that we're looking at for price to actually break is up here. Right? This should give us a 1 to 3, does it? 1 to 2.5, but good enough. Because our target is up here. Now we just wait. Now what we see is that price break structure again, right here. So this now becomes a break of structure. Now in this break of structure, which one is our order block? Can anybody tell me? Which one of these candles now create our order block? Is it the green candle right here or the red candle right here? Type in green or red. All right, Ricardo said the hammer candle, small red candle, red. Okay. So this now is an order block. All right. Now, guys, the question I want to ask you is, should we be waiting on this order block? Let's call this A, and let's call this B. Which one of these order blocks should we be waiting on? A or B? And tell me why. Which order block should we be waiting on, and tell me why. I'm going to get something to drink. So answer in the chat. I'll be back in 2 minutes. A or B, which one of them and why? Tayona says B because of the fair value gap, but Tayona, there's also a fair value gap right here. There's also a fair value gap right here, mama. There's a fair value gap right there. Ricardo said, I would say A because it was the last one created, but I don't know because there is the fair value gap there at B. Yeah, guys, so the fair value gap is at both areas. Anybody else? Aneta says the first order block is a strong bull candle. The first order block is a strong bull candle. Both of them have strong bull candles on the order block still, but who else? Aha! The great Shakur, man, the GOAT himself. Remember, guys, I said this earlier when we were looking at the charts, right? I would prefer to wait for price to tap the second order block because there's liquidity that is resting right here. So all of this is liquidity right here. There's liquidity right here as well, you know. Right? But this is the move that created the breaker structure. So because this is the move that created the breaker structure, then it had another move that created breaker structure. The market is anticipating that everybody will be taking their trade right here. Which means that a lot of persons would have entered right here. Look at all of these entries. All of these candles shows that there are a lot of entries in this area. So a lot of persons either entered or take profit or added another entry right in this area. So this is an easy target for price to pull back, tap into B, and then push up. Right? So for me, I'm still interested in this order block. Right? So I'm not so interested in this one because it has liquidity resting above it. So for me, B is my answer. Everybody understand why I said B? Or you want me to explain it again? You understand why I said B or you want me to explain it again? Talk to me. Right. So Ricardo says understood. Right. That is it. That is it. So you want to use B because one, it gives you more room, right, to get your 1 to 3. Because this now would be like a 1 to 5. Can probably get 1 to 5 out of this year. And it has a lot of liquidity right here that price can actually come liquidate and then push up. So let's see what happens. What did I tell you guys? There it is. See? Look at this. Look at this. It tap right on the order block and then push up. You see that? Look at that. And then from there, this is what happens. Take profit hit. Come on, guys. Drop some heart emojis in the chat if you're learning something from me, please and thanks. Give me some heart emojis in the chat if you feel like you just learned something. Please and thanks. Just like I was saying, a lot of liquidity is resting right here. So price wants to grab the liquidity and then push up. So whenever we're trading this strategy, I'm giving you my game for free, guys, right? You want to look for an order block. From the order block, you also want to see a fair value gap. So number one, order block. Number two, fair value gap. Number three, break of structure. Number four, you want to see liquidity. And number five, a pullback into your order block. 6, buy limit entry. Because the reason why I would set up buy limit entry is because this happens quick. So if this never happened, if price never come on top here, it would have broken this area and I would have lost the trade. Oh well. But I've back tested this enough to know so there's a great chance that when price actually tap here, it just tap and move quick in the blink of an eye. And I want to catch every bit of the move. So stop loss, buy entry at top of OB. 7. Stop loss at bottom of OB. Right? Right? So that's all you're looking for now. So you're looking for liquidity. So this is our liquidity. Our breaker structure, the impulsive move, left this order block, left a fair value gap, left some liquidity here, it breaks structure again, created this high. I think this high probably would have given us a 1 to 3. Does it give us a 1 to 3? Yeah. This high would have given us a 1 to 3, but instead we go for a 1 to 4. And then we just wait for price. So we set our entry at the top of the order block. We set our stop loss a little bit below the order block. Right? So we set our stop loss a little bit below the order block. And then we target the high. Minimum 1 to 3 RR. Minimum 1 to 3 RR. Right? And then we'll watch price work. take profit hit. So that's the playbook. Order block, fair value gap, breaker structure, liquidity, pull back into the order block, have a buy limit or a sell stop, depending on whether you're selling or buying. And then you have a stop loss at little below the order block, your entries at the top of the order block, and you target the high for a 1 to 3 minimum. Everybody get that? Drop a thumbs up, let me know you get that. Drop a thumbs up in the chat, guys. Let me know you got it. Drop a thumbs up in the chat, guys. Come on, let's go. And I'm going to spend the whole day with you guys. Come on. I'm dropping some gems today. Thumbs up, guys. Thumbs up. Show me some thumbs up. Nice. Come on, Chakor. You don't love me? Come on, man. It's a fire. Still struggle with which time frame it works best though. Okay, I'm gonna help you with that, bro. Don't worry. Okay, all right. Which time frame to analyze? Uses 50-minute, but I try it on different higher time frames. Okay, thumbs up, thumbs up, thumbs up. All right, guys. So let's talk about the time frames now. See? Now let's say we're looking at this trade, same trade. Let's go back to here. So all the way back here, right? The only thing that we're using the higher time frames to do is we're using the higher time frames to actually look at the areas, to find out what the overall trend is, and possibly find the areas that price can react from. So let's say we started on the 4-hour time frame. We're only entering on the 15-minute or the 5-minute, whichever one is clearer to you. We're only entering on the 15-minute or the 5-minute, whichever one is clearer to you. And I'd more likely go with the 15-minute, right? So I typically go to 15-minute. I go with 5-minute. If I see no clear opportunities, I go to 5-minute. No, on the 4-hour time frame, guys, what do we see? Right? We see where price broke structure right here to the downside. So this is a breaker structure, right? And then price created this low right here. See? And then from this low, we have a high right here. What we realize is that price is in a downtrend overall, but currently it's respecting this area and is now in an uptrend, right? So price bounced off of this area. 1, 2, 3, and is now doing this. Now price can either break this low and then push up to push back down, or it can break the low, push back in here and then push up, or it can just start to move back in this area, right? So we're using the 4-hour time frame to get an idea of where price is and where are the highs and where are the lows, right? Now, if we zoom out a little bit, we can see that this area right here, where price is reacting from, is what? What is this? What is this area? Answer quickly, guys. This area where price is rejecting from, what do you notice about the area? Come on, guys, let's go, man. What do you notice about the area that price is rejecting from right now? This area that price is rejecting from, you know, zoom out. What do you realize? The higher time frame, what? Aneta says an order block. Everybody agree with Aneta? Or somebody else is something else? Everybody agree? Thumbs up. Come on now, guys. It not take too long for responding. I'm gonna like the inactivity. That annoys me. Feel like I'm talk to myself. Come on, guys. Everybody agree with Aneta or not have another understanding? Anybody else? So Issa, Javez says that is a demand zone. Anybody else? Let's see a support level. All right. So this is an order block. It's an order block. It's a support level. It's a demand zone. It's all three of them, right? But it's an order block because this candle created this impulsive move that broke this previous high that created a breaker structure. So this candle becomes now our order block candle on the 4-hour time frame. And then price is now reacting from the order block. Don't worry about that yet. You're worried about the wrong thing. So Chakor says, draw the zone too big. No, don't worry about that. Remember, we're not entering from the 4-hour. We're entering from the 15 and the 5. But we need to get an understanding as to what price is doing on the higher time frame. Right? So this is our order block era, because guess what? If I was entering from a 4-hour standpoint, this would be my entry. And I'm targeting up here, this high. Would I be wrong? No, because I've been in profits right now. So I'm not wrong. But this is way too much of a stop loss because I'm not trading a 4-hour. I'd have to wait a couple of days to get this 1 to 8. So if you're a swing trader, right, this is an opportunity for you to trade. But I'm not a swing trader. I'm an intraday trader. So what I do is I recognize that price is at the order block. So now that I see price on the order block area rejecting from the order block, I can now say, okay, let's go down and refine the order block. So we'll go down to the 1 hour now, and we'll look at the 1 hour structure. We see where price broke structure here. We see where the high that was created was right here on the 1 hour. Then we'll go down to the 30 minute. And we can see the structure. Price broke here. It's a breaker structure with a high right here. This is a breaker structure. Right here. And then we wait and see how price reacts to this area. What do we see? We see that price reject from this area, right? So let's remove this so that we don't have any confusion. We know that price is heading to the upside. It's created a breaker structure here internally. And then now this is the area that this is the high that we're waiting on for price to break to decide whether or not this is our change of character. So now we have a change of character, right? This now becomes our change of character. And now this becomes the high. Now we go to our 15-minute time frame because that is where we're entering from. On our 15-minute time frame, we see this order block right here. We see this fair value gap right here. Then price broke here. This is a change of character. And now we see this order block right here. And we see this fair value gap right here. But the issue is that price, one, has a lot of liquidity sitting down right here. Plus, this right here is too close to the high that was created. So what we need to see is we need to see price pull back, grab liquidity, and tap into this order block so that we can have more room to push up to at least have a 1 to 3 and even go further. So now we remove this one, and now we wait and price to tap into this one. Now we're entering for price to go up here, or even for price to tap all the way up here. Which should have given us a 1 to 7. So now we're just waiting to see what price does. And there you go. We're tapped in the trade, and then we hit our take profit. You still think we draw the zone too big, Shakur? You still think we draw the zone too big? Talk to me now, man. No, but you can't. How you gonna worry about the zone on the higher time frame? We're not trading the zone from the higher time frame. We're just using the higher time frame to give us an idea of what is happening, and then we go to the lower time frame and wait on our entry. So when we are on the higher time frame, bro, on the 4-hour, this zone was indicating to us that the reason why price is reacting to this area is because this area is a order block. That's all the higher time frame is saying to us. Now, if you're a swing trader, you can always enter from right here with your stop loss below the order block and take a couple of days, even a couple of months to get up here. But we are not swing traders. We are intraday traders. And as a result, our entries are going to be on the lower time frame. But now, at least we have an idea that price is rejecting from here because it's an order block. So we're expecting price to at least start to go back up to tap into these areas. This area right here, this area right here. And then if it breaks above here, it's going to target this area right here. So we know that there's a great chance that price is going to continue to move up because it tapped into a 4-hour order block and is pushing up. Right? So if you look at this now, guys, it reacted to the order block. We'll go down to the 15-minute and refine the trade. We'll confirm now on the 15-minute that price has changed character. That price officially wants to go up. So now we set our trap at our order block on the 15-minute, and then that is where we enter from to take the trade all the way up. And this would have given us, if we were still in this trade, it's given us a 1 to 9. Because we understood that the higher time frame tapped into our order block and is pushing up. And now the lower time frame on the entry, we look for the order block on the entry time frame, and then we wait for it to hit the order block and then shoot up. And then along the way, as it's moving, there are other order blocks that are being created that price can return to. So now we're waiting to see what happens with price when it taps into certain areas. What's the next move, right? The next move, the next order block area will be right here. So this could be an order block area that price can reject from and push up. Let's see. There you go. So price rejected. So as you can see, liquidity right here. Order block right here. Let me remove this so you can see clearer. This was the breaker structure right here. This was a candle that caused the break of structure, leaving a tiny fair value gap right here. This is the order block right here. This is the liquidity zone right here that price is rejecting from right now. And we set our trap on the order block right here. Stop loss a little bit below, and then we target the high, which would have been right here, and then we just wait to see what happens. And there you have it again. We got another 1 to 7. We got another 1 to 7. As easy as that, guys. The hard part is being patient to wait for your setup. But everything was there. We have the impulsive move that created a breaker structure where the order block that was left. We have all this area right here as liquidity. Price came back down, tap into this area. And then as it tap into the area, it started to push up. And if you're in the trade from down here, you could have taken a second entry. So say for instance, you entered down here. And you're targeting here. Or even above. If you're targeting even somewhere up here. Price would come down, you get a next entry right here, and now price is on the move again. Price is now on the move again. So now you have two entries waiting for take profit. What happened here? Let's see if we see another order block here. Look at this. This is how you manage a trade. Boom. Breaker structure right here. Order block, candle right here. Could have taken another entry right here. Target up yourself. Again, there's another breaker structure right here. This would have been the breaker structure that leaves the liquidity behind. This is the liquidity area right here, this line. Tap into here, you get a next entry right there. So now you have 3 entries going. Then we'll have our next breaker structure right here. And in that breaker structure, right there, another order block is left right here. The price can always come back down again and tap us in right here. Let's see what happens. So this one would have been an L, but then it reacted. It's not an order block. This will be the order block down here. Let's see. And this is where price is currently. So this could be our next entry right here for price to push up. And this is where price is currently. So this would be the next entry for price to actually push up. Or price can do a deeper pullback down here. But you see where you could have gotten multiple entries on your way up. Right? So big up yourself, Lashy. Big up, big up, big up, big up. All right, I soon get that to you, and Anita. Yeah, man, respect, bro. Respect. I appreciate it, guys. Appreciate it. I just want you guys to back test and implement this in your strategy. You don't have to trade the same way I trade. Look at how you trade and then implement these and see how it fits in your strategy to help you. So you don't have to trade exactly how I trade, right? So as it relates to stop loss, right? So what you want to do is you want to wait for a high to be broken. So like for instance, you're in this trade. So for instance, you got the trade from down here. You see, once you see this high broken, then you can move your stop loss to break even, right? And then as price comes back, tap into here, and you get a next entry, and then price breaks this here right here, this high, then you can put your stop loss below here, and then if price takes you out of this trade, at least you'll be in deep in profits, probably a 1 to 3, and you won't lose much. Then when price breaks structure again, you move this one below here, and you move the new one at the same position right here. And as price moves up again and break this high, which it didn't break the high, but it maintained the high, you'd have more likely lost this one. But at least you'd have had a 1 to 4 on this one, and I've had a 1 to 11 on this one. 1 to 11 and 1 to 4, call it says a 1 to 16. They'd have been up 16% before this one came back down and took you out of the 2 trade. No, sorry. It would have been 1 to 3 right here, and 1 to 10. So it'll be 13% that you'll be up. So as price breaks structure, so just to answer your question, as price breaks structure, that is when you move your stop loss. You don't move your stop loss until you see price breaks the previous high. And this is not a break, guys. This is not a break. This is not a break. This is a break. You see where the candle actually closes above the line? That's when you consider it a break. You don't consider this a break because there's no candle closure above the line. That's not a break. This is a break when the candle closes above. This is a break. So this is not the break. This is not the break. This is the break when the candle closes above. Right? So right off the back, you get a break right there. As you can see, price return to the order block and then shoot up. And then once this breaks, you can move your stop loss to break even. Everybody clear? Everybody clear? You're welcome, Mama. You're welcome. You're welcome. You're welcome. Everybody good to go? Guys, remember, if it's the first time you're joining, please hit the subscribe button. If you enjoy the live so far, please give me a thumbs up. I can't believe there's 12 people on the live and I only have 8 thumbs up. Come on, guys. Come on, man. Y'all can do better than that. Y'all can do better than that, man. Come on. Show me some love, man. All right. So everybody understands. So all you guys got to do now is you got to read, just go and back test to see how you can implement it in your strategy. So I have multiple ways that I trade. I have multiple strategies, right? I also have a 1-minute scalp strategy. Let me show you my 1-minute scalp strategy real quick. A 1-minute scalp strategy typically only works on in a ranging area. So like for instance, say for instance you were here. You have this range, so you have price ranging in this area. I call it my 1 minute breakout strategy. As you can see, price is ranging in this area, right, between these two lines. What I'm waiting for is I'm waiting for price to close above here, or I'm waiting for price to close below here. Once I see a candle close below here, I am entering, right? Now, guys, I must tell you, you have to be very experienced to actually do this strategy, right? So I'm waiting to see what happens. As you can see, price breaks below here. I'm entering on the break of the candle, and my stop loss is going to be on the high of the previous candle before the break. And I'm targeting the low, or a minimum of 1 to 3. Right? So as you can see, the low would give me a 1 to 3.4, and then I'd wait to see what happens. Boom, take profit hit. So I'm waiting on price to break the range and then push down. Let me see if I see another one. Yeah, here's another one. As you can see, price is ranging here between these two zones. The price is ranging between these two zones. Boom, boom, boom. It's ranging, right? Now, the first trade I would have taken would have been this one. And I would have gotten stopped out. So this first one would have been a loss. Understand, guys, that when it comes on to trading, losses are a part of the game. So this first trade would have been a loss. But I'm still waiting. And then price breaks out again. This candle was a candle that broke out. Stop loss above the previous candle before the candle break. And then I'm riding this down. Riding this down all the way to down here. Probably would have been stopped out right here. Give me a 1.7. Same thing happened here. Range. Sorry, range. The price is ranging there. Price break right here. And then I put my stop loss at the previous candle before the breakout. And then I target up here. See if I see a next one. So you look for a range. So when you see a price, when the price ranging, you wait. There's one right here. The price is ranging in this area. I would have entered on this candle that breakout. My stop loss would be above the previous candle before the breakout. And then I would have ride this up here. So that is what I call my 1 minute scalp strategy, breakout strategy. It's not for the faint of heart. If you can't manage taking losses, don't trade this way. I can tell you that. Here's another example. Again, price broke out with that candle. So because this candle is so long, I'd go back to the halfway of the candle. And then my stop loss would be above the previous candle before the candle was broken out. And then this would be our next 1 to 3.4, 3.6 right there. So you can go ahead back test it, see how you feel about it. Again, of a range right here. Right? So you have this range right here. Say for instance, this wasn't there. Price is ranging in this area. You wait for one direction. So this candle, enter on the close of the candle, stop loss will be above the candle that before the candle that caused the breakout, and it will target a 1 to 3. We're not get the 1 to 3, but we'll come pretty close. Or you get 1 to 2.7. So the idea is that with this now, whenever the candle moves, you start to put your stop loss as it creates structure. So like this red candle right here and then the green candle, you have put a stop loss below the red candle. And as it move up, you put a stop loss below here again. If you move up, you put a stop loss below here. And then I probably got stop out right here. But it's a scalp strategy. Yeah, has to be on the 1 minute. Has to be on the 1 minute. And it has to be ranging. It has to be consolidating first. And then as it break out, that's when you enter. You get me? Respect. You know, I always look for the cheat code them. Always looking for the cheat code them, you know? If you're new to the channel, guys, please to subscribe. Please to give me a thumbs up. Please also, guys, to follow me on Instagram and on TikTok. I'm going on TikTok as well. I'm on TikTok, very active on TikTok right now. So follow me on TikTok and Instagram at Learn to Trade JA. You know, I appreciate it. Now, because we don't really have market doing much tomorrow, I think that's where I'm going to leave it for today, guys. I don't think we need to really analyze the markets because I don't know what will happen by tomorrow. And tomorrow is not really a trading day. So I'm not really looking for much to happen. Right? So what I could do is I could do a breakdown tomorrow evening. Could do a breakdown tomorrow evening. To see what we can get. You know what I mean? Yeah, man. So see there, like, subscribe, and turn on the notification bell. So whenever I'm on, you guys will be notified because we do live trading mostly on Tuesdays, Wednesdays, and Fridays. Depending on the vibe, I might go on a Tuesday or a Monday, don't matter. Just depending on my vibe, but definitely on Fridays and on Wednesdays, I try my best to do live trading with you guys, so you guys can possibly take the same trade that I take, right? So subscribe, like, share, comment, leave it, turn on the notification bell, follow me on Instagram, follow me on TikTok. I don't know. Thanks a lot for chilling with me this Sunday. You know, I really appreciate it. Every time I see you guys come out, it warms my heart. You know what I mean? Because, you know, it shows them I give value and I appreciate the value. So I'm happy that you guys are here. Shout out to everybody. Shout out Lashy. Haven't seen in a minute, Lashy, but big up yourself. You know, Aneta, thanks for passing through. Chakor, as always, big up, bro. Tyonia, I think it's the first time seeing you, but big up yourself. Ricardo, big up yourself. Who said they are keep the thing vibes? Joker, big up yourself, Joker. Shavana, I think it's Shavana, right? I think it's Shavana. Ranzo, big up yourself for passing through, my bro. Appreciate you. Hey, baby. Wifey, come through. Big up yourself. Who was it about in our place? Yes, everybody who came through and vibes of the thing, I appreciate you guys being here. I don't know, big up on yourself. Please spread the word. Tell more people about me. Tell more people about what I do. You know what I mean? All the different trading communities that you're in. Share the link, share the live, even share this video with somebody you know it will help. You know what I mean? And I don't know. I think that's it for the day. I appreciate you guys for chilling with me. When I was learn to trade JA, and I'll see you guys on the next one. You don't know. Peace. Much love. Big up, Patty. First time. Respect for coming through. Hope to see you more. You know what I mean? If it's your first time, just drop a like, um, drop the thumbs up, subscribe, follow me on Instagram and on TikTok. Yo, trust me, when we're chilling on a Sunday, I just feel our vibes and I just drop gems. You know what I mean? I'm always dropping gems, always giving free gems. But if you don't know, you can join the community as well, guys. The link is there to join the community so you can get more of me, you know, to help you with your trading journey. So thanks again, guys. Much love to you at 2 Anita. I'll see you on the next live. All right. Have a great one. Have a great Sunday. Restful Sunday. Don't think about the charts today. Don't think about the charts tomorrow. Just enjoy your life. Tuesday, we'll make a bag of money. All right? You don't know. Peace.